Good morning, dear subscribers. Today is 2nd of February, and the day of yesterday was flagged by the news of imposed tariffs from the part of the United States President Donald Trump, who decided to impose tariffs on imported steel and aluminium. And as you can see, from one point of view, from just simply fundamental point of view, economic point of view, of course, such kind of decision should increase inflation expectations I mean, domestically in the United States, because if the prices for steel and other metals will go higher, for sure it will increase the prices for the final products, for the finished kind of products, and that should stimulate the inflation in the country. Anyway, as you can see, the dollar lost its value during yesterday's session, and that was as we can explain this, it's first of all the fears of the market regarding the possibility of starting new kind of trade wars between the nations. At the same time, we pay attention also on kind of worsening impact of such kind of decisions on the whole state of the United States economy. So all in all, as you can see, the dollar was getting under downside pressure because of this decision. And as you can see, the rising risk aversion spreading over the markets also dampen the dollar price at the moment. The stock prices under the heavy downside pressure, as well as the yield on United States government papers. For example, the yield on 10-year United States Treasuries are trading at the moment around 2.81, which is below the highs of this week, which was registered around above 2.9. All in all, we can see altogether the risk aversion fears, which, for example, give a lot of support to such kind of currencies like safe haven status currencies like Japanese yen and Swiss franc. At the same time, the negative tendencies of imposed tariffs, possible negative tendencies for the United States economy, also contradicts with the last speech of Jerome Powell, the president of the Fed. And all in all, the dollar is under the downside pressure at the moment, and of course it will be very interesting how the dollar finally closes this week and how it will start the new one. Also, we pay attention on the political factors surrounding the euro currency at the moment. Don't forget about the national election in Italy, as well as election results in Germany. All in all, this could influence the euro price very well, very strong at the beginning of next trading week. Regarding our strategy, you can see that we still keep our long euro dollar recommendation and our short dollar yen recommendation, which more or less happier at the moment. Regarding the sterling, we suggested to stand aside today because of the Theresa May speech during the day, and at the moment we still don't know how this speech will finally impact the market, and that's why we decided to stand aside against trading the sterling crosses at the moment. And the dollar Swiss, we lost once again our shorter trade recommendation yesterday, and now we prefer to stand aside but we'll sell the currency on any upticks above 94.20. As you can see, the chart on the dollar Swiss. Here, the dollar Swiss is trading at the moment at 93.96. For sure, to accelerate its downside pressure, the pair should break below moving average 200 hourly line, which lies around 93.80 at the moment. And for sure, this kind of new risk aversion fears should support the future lower prices for the currency. Probably yesterday we saw a kind of reversal in the dollar Swiss, but at the moment it's a little